Hey, it's your man Charlie P, here to discuss this setup on EU that I took this morning. Caught a sniper entry on that thing. It was beautiful. But yeah, so I snapshotted the picture, screenshotted it, whatever, and put it on my Facebook page. But let's talk about rule changes to my killer crossover strategy that I used in order to take this trade. Since I released the original killer crossover strategy video, I've noticed some things that have made me tweak that strategy a little bit. One big thing I've noticed is that this also works on the H4 time frame. My original strategy is based off of H1. You see the setup on H1. I've learned you can also see it and catch it on H4 as well, and that's what happened today. Okay, so on EU this morning, as you see, my killer crossover strategy, it has to do with the 50 EMA crossing over the 144 EMA. The 50 is the gold, 144 is the purple. So the psychology behind this strategy is basically when a lot of people trade moving average crossovers, right? So when the moving average crosses over like this, most people are going to just start looking for buys because the 50 just crossed up. Well, most people use a 200 moving average instead of a 144, but let's just pretend this is a 200 for most people, whatever. Either way it goes, when this crosses over, most people are going to say, okay, this is definitely an uptrend now. I'm only looking for buys, blah, blah, blah. Well, the market makers know this mess. They know people are going to automatically be looking only to buy on moving average crossovers a lot of times. And so this is basically kind of a trade that allows me to move with the market, quote unquote, manipulation. It anticipates the market makers saying, okay, we know a lot of people are looking to buy this right now because the moving average just crossed over on a higher time frame, on the H4 time frame. Let's go ahead and pull this back down on them. And so what I do is once I see the market has crossed over like this, and then we start getting basically a little bit of consolidation, like there's no longer strong up moves like this or like this is a strong up move. It started to kind of mellow out a little bit, and then it did a big drop down, and it actually dropped below a center point for me, or what I would say is like a anchor point, or like the last prominent. Basically it made a lower low. I mean, that's basically what happened. If we want to talk about real market terms, then right here it came down, and when it came back up, this is officially now a lower low. But it's coming through. I drew a line here in anticipation to say, okay, if the market breaks this, then I'm going to start looking at it like the market's about to go down. So it broke it. When it closed past it, all I did is went to H1 and said, okay, I'm going to wait on the market to come up and grab the 50 EMA, and I'm going to hop in the trade. Now, when it grabbed it initially, this is past my trading hours. This was probably like 2 o'clock in the afternoon. I'm not entering no trades at that point in the day. So I was like, well, hopefully it'll come back and grab it again in London or in New York. I didn't get up for London. It did grab it in London, and I would have had a little bit better of an entry potentially. But luckily, when I woke up this morning, it was, well, it was down here this morning. But once I saw this candle start to come up, I was like, all right, it might grab it one more time. And if it does, I'm hopping in. And so I actually hopped in the trade based off H1 right here when it grabbed the 50 EMA. And then as you see, we had no drawdown, and we, the trade flew. Now, I actually didn't stay in the trade this long because the example I'm showing you right now was actually a challenge, a 200K challenge that I'm doing for a company called The Funded Trader. I just acquired a 400K account from them. So I'm just trying to max it out and get the full 600 that they allow. So I got 200 more to go. So I'm working on that now. And I just did enough to pass the phase 1, which was about 50 pips that I needed. So I got out about right here. And just to show a little I guess, proof of that. Here's the email for just showing that I passed phase 1. Today, you see it was 6 hours ago that I received this email. You see the date pop up, June 1st, 2022. So, but yeah, so I didn't just hold the trade the entire way, which I know I could have held it longer, but that's why I got out. I didn't need that much on this one, on this account, which is all I'm talking about. So, but back to the actual strategy. In the original strategy video, I said that in order for this setup to be valid, the formation had to come in contact with the moving average crossover, meaning price actually needs to touch, like come down and touch the moving averages. Oops. Oh, I didn't never fix these trend lines on this account when I got it, did I? Where's the ray? Here it is. So basically it's just saying, like, if price would have came down anywhere, it don't matter where price did it, but it needed to come down and like interact with this moving average crossover somewhere and then come back up and do all this other crap. And I've learned that's not true. It doesn't need to actually come in contact with the moving average crossover. So we can X that rule out of the equation. And the other rule that I made was that it needed to pass the last prominent wick. So remember how I said, let me clear this up a little bit. Remember how I said once the market closed past here on H4, that's when I knew I can get in. Well, this is the candle body of this right here. It passed the candle body. I used to say it had to pass the wick, which, I mean, it still would have been valid in this case based off that rule. But as long as it passes the body, we're fine. What was the other rule that I'm missing? Oh, and that it had to be on H1, which of course I'm seeing now. So if this was an H1 trade, and I'm actually show you an example. I've got one pulled up of another one that did not come into contact with the moving average crossover, but this is the same thing. And this is on H1. This is what I would normally look for when I'm looking at a killer crossover based on the new strategy rules, which they're not entirely different. It's just a matter of saying like this is not coming in contact with the moving averages anymore though. But again, you see the crossover. Oh, really important. The crossover, I found the strategy works way better if the crossover is in the center of the formation. So this is pretty much about our formation, like the M pattern basically. The crossover is kind of in the middle of that. Same way on EU on H4. The crossover is somewhat in the middle of this formation. It doesn't have to be dead center, but just somewhat kind of towards the middle. But let's go back to this example over here. So on this one, we have our center point being here. And so we just need this to get past. And it did it on this candle right here. And it doesn't really look like it too much, but if I zoom in a little bit and well, first of all, let me fix my line. So you can see that barely closed past the line. If you can't see that, you can do this as well. Move that out the way, hover your mouse over the closing part of that candle. You see the close price says 0.74268. So let's focus on that 268 versus this one closed at 264. It definitely closed below that. So we have a confirmed break of this center point right here. So at that point, being that this is a H1 formation trade, then I would go to the M15 chart or M15 time frame, wait on price to come back up, grab the 50 EMA, and we would have entered this trade right here. Now I don't trade AUD USD. This is just one that I do remember having this pulled up at the time that this happened, and I didn't take it, and I was mad at myself. But I didn't take it because it didn't come into contact with the MAs, and this was still when I was trying to figure out, like, does it actually need to interact with the MAs, or is it cool as long as it just makes the general formation? And so this was kind of the straw that broke the camel's back when I had missed this trade, and I was like, yeah, I'm gonna change that rule. But again, You catch the trade right here when it grabs the 50 EMA, and you have minimal drawdown, basically none, and the trade takes off forever. Here's another rule that is extremely important that I have found that I needed to specify. And this rule is also the same change of rules for my Omega strategy. I know I was saying I'm going to put out a revised Omega strategy. This is the only rule that's really changing in the Omega strategy at this point. When the price goes back up to grab the 50 EMA, when you're looking to actually take the entry, the MA, the 50 MA cannot have passed the 144 yet. So you see how it was still on the opposite side of the 144 here. It didn't actually cross over until we were already in the trade, and then it crossed over here. So let me show you an example of where I learned that rule was a thing. Because I tell you, anytime, the way that I tweak my strategies and stuff is when I take a L, I obsess over that L until I figured out why I lost the trade. And this right here, look over to the right of the screen. On GU back in March, towards the end of March, this was an Omega setup that I was taking. As you see, everything's lined up as far as my general Omega rules, where price is hovering between the 144 and the 50 EMA on H1. At the same time, it's oversold at some point while it's, there. Here's our center point that we would have been looking at. This point needed to be passed. It actually passed right here on this green candle. So as you know, I would go to my 15-minute time frame, March 25th, make sure I get back there, and wait on price. I would go to M15 and wait on price to come down and grab our 50 EMA. This trade I took, and I took it pretty much right where this line, well, I probably got in about right here. And as you see, they killed me. I took that good L on that trade, right? And I was like, what is the difference? Because on H1, everything worked. And I figured out based on this trade, the MA on M15, the 50 had already crossed over the 144 before I entered that trade, before it came and grabbed the 50. So that let me know. I was like, oh, and actually just to prove a point, let me go find something else. Surely it's another one, probably. Come on. Oh, good. Here we go. All right. So check this out. Here's another Omega trade, Omega setup. So we got price hovering between the 144 and the 50 MA, is overbought right here. This was my center point that I was looking at. It passed through the center point. So we got to close past the center point. So I would have went to M15. Let's see. This is March 3rd. Hold on, what happened to my oh, they ain't gonna let me go back to March 3rd. All right, let me go to a different account and see if I can get to March 3rd. Sorry, bear with me, man. All right, let me try it this way. Can I go? Yep, cool. So we would have went to, here we go. And so again, it came back up and grabbed the 50, but look, the 50 hadn't crossed over the 144 yet. It didn't do it till after we would have already gotten into that trade, versus that other example I just showed you. It was already crossed over. That's why I lost. So that's the rule change, the main one that is both for a killer crossover and Omega. Make sure when it comes back to grab the 50 on the M15 time frame, then you know that it isn't crossed over yet. And same thing. So if you're doing it like today's trade, since I took that on the H4 time frame, then so I spotted the setup on H4. So instead of looking for the entry on M15, I'm looking for the entry on H1. So if it's a H4 setup, you look for the entry on H1, but that rule still applies. This cannot have crossed over the 144 yet, or this is an invalid. Don't even take it. But then again, if it's on H1, I don't know where, oh, I'm on the wrong, what's the name again? But so if it's on H1, like this setup was on AU, then you take the entry on M15, but just remember, make sure that the 50 EMA has not yet crossed over the 144 on M15. So that's pretty much the rule changes. And that's how I took this trade today. Wrong pair. But yeah, that's how I took this trade today. So killer crossover. It does not need to interact with the moving average crossover anymore. Just make sure you have the general formation and follow the other rules that I just gave. Definitely hope that made some sense. Let me know in the comments if there's anything that I can clear up. This does not need to be overbought or oversold when we're talking about killer crossover. The overbought, oversold rule is only for Omega between the two strategies I just talked about in this video. So killer crossover, it doesn't matter on the Omega setup. Yes, it needs to be overbought or oversold before you can take that trade. All right, y'all. And also, yeah, the Omega setup also works on H4 as well. Let me actually give an example of that, because I know where one is. It just happened on gold yesterday. Here's an H4 setup, Omega setup on H4 right here. So you have this, and I actually missed this trade, and I was too focused on something else and wasn't looking at H4. I had it on H1 most of the day and didn't realize it until it was too late. But here's the setup. You've got price hovering between the 144 and the 50 EMAs. Is overbought at some point in that setup. Here's our center point. Let's see, it came up, and this one's a little bit more difficult because the center point isn't right here. It came, I would have drawn this as a center point initially. Let's see, came up here. I would have adjusted it here, and then this is our pass candle right here. So this red candle, once it passed the most recent center point or anchor point, whatever you want to call it, since it's on H4, then I'm going to enter using H1. So I come down to H1, price comes back up to grab the 50. Look, it's on the proper side of the 50 EMA. I'm sorry, the 50 is on the right side of the it's on the opposite side of the 144. It hasn't crossed over yet. So remember that same rule. So we could have gotten in London, and then they also came back and gave us another opportunity to get in New York, because they came back and grabbed the 50 again in New York. So you could have taken this trade essentially somewhere right around in here and caught, if you just would have held it, upwards of 250 pips before it flew up. So the Omega strategy and the killer crossover strategy both work on H1 and H4. Be sure when you enter that the 50 EMA has not yet crossed over the 144 on your entry time frame, whether it be the H1 or the M15, depending on what time frame you saw the main setup on. Hope that made sense. I'm gonna holler at y'all on the next one.